Good afternoon. This is Tony Cherniawski, manager of the Practical Investor LLC. Today is September the 1st, 2009, and the title of my program today is Bear Season Has Arrived. This video is meant for instruction and entertainment purposes only. This is not a solicitation to buy or sell any security. A purchase or a sale of a security may result in a loss of principal. Please consult with an expert advisor who may explain the risks of any investment that you may consider. You cannot invest directly in an index. Good afternoon. I'd like to bring you up to date on what's happening with the broadening top formation that I've been pointing out in the last month or so. It's still very valid, and I think it's something worth noting now. We've had a breakdown today in all of the major equity indexes. So let's talk a little bit about the background information first, why I think this is a major decline straight ahead of us, and it may be full of a lot of surprises for a lot of people. So let's do some background information first. The first thing I want to bring up is that we have been in the bearish season of the year. Usually the bearish season starts sometime in July or August. This year it's waited until the 1st of September, but lo and behold, it appeared right on calendar time. And we now have a bearish calendar going through the end of October. We've had increasingly declining volume in the Standard & Poor's index as we've been trading for the last 3 months. Very bearish outlook when you have declining volume rather than increasing volume in a rally. It's a definition of a bearish rally, basically. We've also had insider selling at the whopping rate. This is, I think, an all-time high of 30-to-1 ratio, 30 sellers for every buyer. As I recall, the July ratio was 19-to-1 and the June ratio was 17-to-1. So the insider selling is not necessarily an indication that the market is ready to drop yet, but when we've made a record like this, we're getting awfully close. Unemployment claims have turned back up again. In the month of August, we've had declining unemployment claims in the month of July, primarily because the auto industry had laid off a numerous group of people, very large group, in April. It sort of broke the seasonal pattern a bit, and the Department of Labor took advantage of that and showed the lack of layoffs in the auto industry in July as a positive sign rather than a negative one. The Baltic Dry Index is at a 3-month low. Usually we get these at market tops. We got one, for example, last May. We also had one in October of 2007. So the Baltic Dry Index is a precursor, and it shows that world trade is definitely slowing down. The weekly index of business conditions in the month of August fell to a new low. This index is published by the Dow Jones Publishing Company and the Bank of Tokyo, so it doesn't have the capabilities of being toyed with the way a lot of other indexes are. Cash for clunkers has ended, and so has, and we're winding up the buying season for new homes with the incentive program there as well. So the interesting thing about cash for clunkers, today Ford reported a 21% year-over-year increase. Not a bad increase. However, they expected to see a 39% increase. So we have a situation where the expectations are certainly not being met, and this is not a good sign going forward. The next item, Standard & Poor's Index, is trading now at 130 times earnings. This is about as high as I've seen it. Dividend rate right now fell to 2.07%. This is a pretty low dividend rate as well. So we've got a situation where the S&P has a long way to fall. 130 times earnings, usually what we see in a bear market is that the price to earnings ratio drops to single digits. And so this could be very devastating. China is now has crested at the beginning of August, and is now 23% lower than its peak on August the 6th. Insider selling has reached a ratio of 30 to 1. Very, very high ratio. I think this is an all-time record. In the month of July, it was 19 to 1 according to trim tabs, and in the month of June, it was about 17 to 1. So we have a situation where the markets are really in a very, very precarious position right now. So let's go to the charts. We'll look at them briefly and then give you a heads up on what we expect to see here in the near term. The first thing that we want to look at is the industrials. You can see that the industrials has, the Dow Jones Industrials has a expanding triangle, otherwise known as a broadening top. I also put in there that there is a bearish wedge that we've just violated this morning. This was my key to making the announcement today of a potential crash warning. The reason I say a crash is because the target that we have is about 77.20. That's roughly a 20% decline from the top for the Dow Jones Industrials. The next one that we want to look at is the Standard & Poor's Index. It also has broken a wedge. It also has a broadening top. And what we're looking at here is a potential target of 825. These targets are more or less soft targets that could be exceeded, or they might not quite be met, but nonetheless, I have a cyclical model that tells me that we're going to probably see 825 sometime possibly within the next month or two. So the next, final one, there are no indexes that are exempt, by the way. Here's the NASDAQ 100, and believe it or not, this has a target of about 1,300. We're talking about roughly a 22% decline from the top for the NASDAQ 100 index. So we have quite a move ahead of us. This could be a fairly rapid decline, so I'm just putting out this warning. There's no guarantees in this market, of course. These targets may not be met, which means we may not have a crash. Definition of a crash is a 20% or higher decline. On the other hand, we've looked at China, which went down 20%, rallied back up briefly, and is now in the next phase of the decline. It is now officially down, as of yesterday's close, 23% from its top. So with that in mind, what I'd like to do is just review with you the fact that we have a daily newsletter for subscribers. We have 1 month left. It would be $40 through mid-October, so there's actually 6 weeks of a subscription left for the price of a month. I'd like to encourage you to join us in doing that. I will make major announcements here on YouTube, but I'm not going to track it on a day-to-day basis. This putting on these programs is a bit of work to try to prepare for, and I want to make sure that what I do is accurate and timely, but at the same time I have subscribers that I need to honor as well. So with that in mind, I hope you take fair warning here. This market is not going to leave much leeway for people who are not quick to take the hint. And I hope all of you do the right thing. And I also wish you good luck and good trading on the markets in the next month or two. Thank you very much.